The 2018 bucket list of oil stocks published by malcysblog.com has seen an increase in the number of shares that's been covered to 18. Let's speak now to the portfolio manager himself, Malcolm Graham Wood. Malcolm, welcome.
Thank you.
Why this expansion, first of all?
Well, first of all, it was a slightly disappointing year, to be honest, the bucket list. Only half a dozen stocks were above water on the year, and although the oil price started at 57, went down to 44 in the middle of the year, as we talked about, it ended up at 70, and it's 65 right now. And some of these stocks should have performed better under those circumstances. So stocks which I'd like to have taken out because they perform really well probably need another few months, and the market is being pretty hard on the oil stocks at the moment.
Let's take a look at the list, because I think if we bring up the list and we can take a look at the numbers that you've got on there. The ones in black are those that have managed to survive the cut. And you've got there 6 in red, which you are bringing into the portfolio. I want to take a look at those new kids on the block in just a minute. But what are your choice stocks as you go into 2018 with this bucket list that you've got here? Those that have, as I say, survived the cut. What are your choice stocks?
Well, I guess the SDX up the top there has been a very good performer last year, but again, should have been a better performer. SDX is in Egypt and Morocco. I went to visit the assets in Morocco a few weeks ago, and it's in looking very good form. I mean, it's very high margin stuff. I mean, their costs are about 30 or 40 cents per MCF of gas, and they're producing 6 million MCF a day of gas, and they're planning to get up to between 8 and 10 this year. So profitability will pick up very nicely. There's not much doubt about them being able to find the gas in Morocco. It's fairly easy, fairly shallow, fairly cheap, and as I said, they have very low costs. There's a 10-year tax holiday in Morocco, and the customers are all there. They've got an Atlantic free zone and so on. So, the customers there, the government, given what their costs are 30 or 40 cents, the price of gas in Morocco is $10 an MCF. Just do the sums. It's easy.
Yeah. What I certainly want to talk about is Hurricane. Why have you included this when the performance has been as it has been?
Well, I mean, obviously it was a big performer the year before, and the key thing about Hurricane is the Lancaster development, which is being put together at the moment, and they're expecting first oil sometime in 2019. Now, the reason for putting it, I think the underperformance last year, they were down 30-odd% last year, was that they had to raise the money to develop the Lancaster. And that was 530 million of equity and convertible. So inevitably it gave some indigestion. But the point is that when this gas, when this oil comes on in the beginning of 2019, we're going to have a rush for it. Providing it works, the data room, which is open, the majors will all be in there. And I'm keeping it in there because there's just a little chance that one of the majors is going to break ranks and might come in and go early. Because it's a fractured basement, they really want to see it flowing. Those people who believe Dr. Trice might just come a bit early for that
So
one.
what share price would we be looking at then for this stock? Because, I mean, the underperformance last year surely means that if there is upside potential on some sort of big event happening, we're looking at a multiple increase from where we are.
Big multiple of the current share price. I've got a target price of well in excess of 100p a share, so they're at 30-odd p a share now, which is why I'm keeping them in there. I think that patient investors, well, either this year or next year, will be amply rewarded.
Okay, let's bring the list back up again and ask you to take another one of these stocks you'd like to talk about, because there's still more on the list there in terms of the black ones, those that have survived.
Yeah, well, we'll run through them some briefly in 1 or 2 cases, but obviously Jersey Oil and Gas is probably the next one to have a look at. A really successful year last year. This was the high-risk play from last year. Don't forget, one well only in the North Sea on the Verbier prospect, but they're in good company because they're with Statoil. It looked like it was a dry hole. They did a sidetrack and then they found the hydrocarbons. This year they're doing exactly the same thing except in an appraisal. So the Statoil have announced that they're going to drill in midsummer, so I'd expect July or August. The reason for the potential upside there is that when they announced the discovery, they said it'll be between 25 and 130 million barrels of oil. Now, unless something goes horribly wrong, appraisal will only firm that up. And I think firming it up would mean, say, 75 to 150 million barrels, if not more. This thing, at the price that it's at the moment, is way, way short of that. I think it could be a 5 times multiple, and I think the downside is pretty limited.
Yeah.
So,
last pick from the stocks that have survived over?
I suppose Far is without doubt the cheapest. It's quoted in Australia, but it's got a position in the Senegal development that Ken are in, and I think that is worth twice the current share price on its own.
Yeah.
But they've recently announced that they've got some really exciting acreage and a big lump of acreage in the Gambia. The Gambia historically hasn't been a big oil and gas province, but it's only one stage down. It's next to Senegal, literally miles away. They're indeed Far are using the Senegal ground base for their offshore drilling. I'm expecting them to drill probably in the fourth quarter of this year, but in addition to the Senegal assets, which of course are in arbitration for the operatorship at the moment, if they were to win that, even if they don't win it, they've still got a decent percentage stake, so the upside is huge.
Yeah. Of the stocks you brought on, I'm interested to talk, if I can, first of all about the President's Energy, because this is a stock that came up in the conversation I had recently with Angelos Damascos from the Junior Oils Trust. He's just brought this onto his portfolio fund.
Yeah, I think President is in a very, very strong position. Argentina itself, which is where it is primarily, is a very popular place to be going at the moment. We've seen other companies like Echo and so on, and Vista have just made a big acquisition out there, which makes their President's acquisition look very, very cheap indeed. President already had an operation out there. They bought an operation from Chevron. The majors are all in Argentina, but they're all playing over this Vaca Muerta, the big shale play. So President made a fantastic acquisition there, significantly increasing production, increasing margins, and I'm very, very excited about President for this year.
Yeah, talk to us a bit about some of the others on that list.
Well, Trinity is Trinidad and looking in very strong. That's probably the biggest margins of any company I follow, to be honest. But they've came from almost going bankrupt 2 years ago, and they're in such a strong position. They cut a deal with the Trinidad authorities, the Ministry of Oil and Ministry of Finance, and they've almost paid it all back now. Production is increasing, and they're starting to drill more wells this year. I'm really excited about Trinity. Eco Atlantic, there are a lot of people in that, and the reason to be excited is certainly proper. Guyana and Namibia is where they are, but Guyana is where the sort of the sex appeal is, because you've got they're adjacent to the Exxon block. Exxon have now made 7 discoveries in the adjacent block with 3.5 billion barrels of oil. Total are in the process of trying to farm into the Eco Atlantic block. I'm expecting them to do that. Eco will then be fully funded for anything they want to do. The upside is really substantial. I'd be quite surprised if Eco Atlantic was around in the same form as it is this time next year. I think it'll either be taken out lock, stock and barrel. And of course, Tullow are drilling adjacent to their acreage in the summer in Namibia as well. So very exciting there.
I do want to touch on the last three if we can bring up that list again to take a look at Echo Energy is the next one down. We'll get into Reabold and Savannah in just a minute, but Echo?
Yep. Well, of course, Echo, we're going back to Argentina, which is why South America is proving so exciting at the moment. They've got Bolivia as well, which they just announced that they're continuing their reprocessing of the seismic there. But the excitement is all about Argentina here, and I think it comes in 2 wedges. First of all, on the Fraction D and Fraction C blocks, where they're going to be doing workovers and drilling in the middle of this year. I'm expecting that to start any time soon. So we'll have news from that in the middle to the end of the year. And as we get towards next year, they've got a thing called Takuaiki, which is the real big upside, and that's a 2019 play. But of course, put those two together, and Echo could be very exciting second half of this year and next year.
Reabold?
Reabold is really exciting. Now these are two fund managers from the M&G, former oil and gas sector analysts from fund management, and they've bought into 2 or 3 really exciting plays. Just onshore south of England, the Wick in the North Sea, and I think they're very, very exciting. Really smart move. What they're doing is just getting involved in a small number of quite small pieces of action which they've noticed either the majors have firmed up and found, but it's too small for them, and I think that we should see some fireworks from them.
And they've got money to play?
Yeah, I mean, first of all, they raised money last year, the plan was for them to do 4. They've had a call on their money as well, so that and I noticed about 3 weeks ago they raised some more money. And the exciting thing about this is that they're not taking a huge amount of money at a big discount. They went back to their shareholders and said, we've still got 2 or 3 really exciting prospects on the go here. And I think that we'd like to raise some money, but we'll stick to the level or slightly above the level we did before. So no selling out for a big discount here.
Finally, Savannah.
Savannah, yeah, I mean, interesting, because I met with Andrew Knott yesterday, and of course, they were due to go into the bucket list last summer. Literally the night before, when I was just about to publish the blog for the next day, they were suspended because there was a deal coming. Later in the year, they announced that it was buying the assets of Seven Energy, which is a Nigerian company, which was getting into terrible trouble. Probably nobody in the other industry apart from Andrew would have done 2 things. First of all, seen it and decided that it was worth a go. And secondly, it was a huge amount of work. There were huge debtors in there, and there were problems. But once you've sorted it out and you refinanced it, which is what he's done, you're in a very strong position because you've got quite a substantial production coming through. He's therefore promised to pay a dividend for this year. And of course, he's just starting the 3 back-to-back wells in Niger, which he was meant to do last autumn, but he couldn't do whilst the shares were suspended. So it's very exciting for Savannah holders after a long wait. OK,
look, we'll have to leave it there, but thanks indeed for joining us. Your new 18 stocks on that bucket list for 2018. That's the portfolio manager from melkysblog.com, Malcolm Grenwood.